So we were speaking before the show, and you mentioned an issue that you get asked about a lot, and it's an issue that I get asked about a lot, and that's about the 10-year tax exemption for Olim. Can you speak about what it is, what it's not?
What it's not,
Yeah.
what it's not. Yeah, it's probably the most misunderstood, misinterpreted area of it's really Israeli tax law. I'm a US CPA, but of course I bump into it a lot and people misinterpret it a lot. I think I've gotten 4 or 5 calls within the last 4 days of people that assumed it meant a lot of things it didn't mean. So what it is not an exemption from taxation completely in any jurisdiction. It is very specific. So it does not completely exempt you from all Israeli taxes or all US taxes. Really doesn't do much at all for your US taxes. It specifically exempts for new Olim only. New Olim or long-term people who are out of the country for long-term. You need to speak with an Israeli accountant to see if you qualify. For their first 10 years of new Olim, it is income that they actually earn abroad. So that can mean 2 things. For the most part, it refers to passive income. So that's when you're bumping into it the most, Aaron, I assume, is, if you open for a new Olim, an account outside of Israel, then that actually is relevant for them. Or if somebody has a rental property that they come over, they have a rental property in the States, or they move out of their apartment and start renting it out. So that's actually income from outside of Israel, and that would be exempt.
And that's considered passive income, right? Passive income that you get from investments
income.
or from royalties or whatever, any kind of dividends or what have you, right?
Yeah, and for me, I think the number one benefit there is not necessarily your bottom line taxes. It's really just one less accountant, one less jurisdiction that you have to deal with if you make aliyah and you're not self-employed, you don't have a business, you just have, either you're retired or you are an employee of an Israeli company. You don't have to tell Israel about your investments back in the States right away. You eventually do, and you still have to keep telling the US, but you don't have to go and hire an Israeli accountant fresh off the boat if you don't have a business or something, for most people. Okay. So I think that's the number one is just it's one less thing to deal with. It is really unlikely to keep you from owing taxes completely on any income. In most cases, every bit of income is taxed in one place or another. In most cases, it's only taxed once, not less and not more. So you need to figure out who you're paying, who's the right person to pay. The other thing it can do is that if you're actually flying, you're leaving Israel, and you go, let's say you're a doctor and you work in New York for 2, 3, 4 months a year, and you're not doing that remotely, you're not doing consultations remotely, then the income you earn while you're actually in New York, that would be exempt. If you have anything in between, really, either way, but you need to speak with an Israeli accountant about the details, any subtleties, anything where you have a business, but like some of it is passive or, a partnership and things like that, it gets more complicated. But it's not as quite as all-encompassing as a lot of people think.
And in most cases, as you mentioned, there's usually not double taxation, right?
Right. In most cases, there's not, but there can be if you pay the wrong place first. So if you're paying US taxes for 10 years on income that, let's say you have an employer in the US, or you're a contractor of a company in the US, and you think that you're not supposed to be paying Israeli taxes for your first 10 years, you're paying US taxes for 10 years. And then once Israel catches up with you, Israel could easily want you to pay back 10 years back taxes, and you're not going to be able to get refunds for 10 years of back US taxes. So in most cases, when things are being done properly, there isn't double taxation.